Dear students, this lecture is for 5th Sem BCom. The subject is Accounting for Managerial Decision. Today's topic is Inflation Accounting and the subtopic is Lease Accounting. Unit 5, Session 52. Students, the learning objective of this session is to acquire practical knowledge on lease financing in different situations. At the same time, the session outcome is students will be able to know that leasing is a new source of financing capital assets where a company forced to look for alternative means of financing the projects. Firms are required to go for massive expansion, diversification, and modernization. Essentially, such projects involve a huge amount of investment, high rate of inflation, severe cost escalation, heavy taxation, and meager internal resources forced many companies to look for alternative means of financing the projects. Leasing has emerged as a new source of financing capital assets. Let us try to solve a problem in order to understand the concept. Bright Leasing Company Limited provided you the following information and requested you to suggest whether the proposed lease is feasible or not under net present value method. Cost of asset is 10 lakh. Cost of capital is 10%. Rate of depreciation is 10%. Tax rate is 35%. Lease rental per year is 3 lakh. The present value of annuity of rupee 1 at 10% for 10 year is 6.145. The solution is like this. The calculation of cash flows after tax. First, we have to take the lease rental, that is 3 lakh. From the lease rental, we have to subtract the depreciation at the rate of 10%. We calculate the depreciation as 1 lakh, and after the subtraction of depreciation, we'll get the amount called as income before tax, that is 2 lakh. From this income, we have to subtract the tax at 35%, that is 70,000. Later on, we'll arrive at income after tax, that is 1,30,000. And for this income after tax, we have to add back the depreciation, that is 1 lakh. So finally, we have arrived at cash flows after tax as 2,30,000. Now it is the time to calculate the net present value. The formula is like this. Net present value is equal to present value of cash inflow after tax subtraction present value of cash outflow. Net present value, here I have taken 2,30,000 to be multiplied by 6.145, that is annuity rate, to be less or subtracted by 10 lakh. So we'll arrive the present value of cash inflow as 14,13,350 to be subtracted by 10 lakh. At last, the net present value is positive, such as 4,13,350. The conclusion is that Bright Leasing Company can let out the asset on lease since the net present value is positive. Thank you.